This is a download from BFM 89.9, the business station.
This morning on the Breakfast Grill, I have with me Iqbal Khan, the Chief Executive Officer of Fajar Capital. He was the founding member or founding CEO of HSBC Amanah back in 1998. He is the recipient of several industry and global accolades, including the Royal Award for Islamic Finance, a biennial prize presented by the Yang di-Pertuan Agong, the King of Malaysia. He is also the Lifetime Achievement Award for the award that was presented by His Highness Sheikh Mohammed Maktoum, the Prime Minister of UAE. So let's focus a little bit on the firm. Fajar Capital is positioned in the DIFC or Dubai Financial Center. What would be the core values of Fajar Capital? What would be the investment approach that you guys take normally in the world of Islamic finance?
So we are a principal investment house, and we invest into Sharia-compliant companies. Our investment thesis is very simple. Invest in what you know, invest in where you know, and invest with people whom you know. So what we do is we look for defensible sectors. We look for opportunities to partner with best-in-class management, and we always buy companies where there is a keenness to enhance the governance, where there is an openness to bring more efficiency in the capital structure, and where there can be a partnership between our capital and the management of the company through a long-term incentive plan.
What would that mean? What would that translate? Is that more of an asset management kind of focus?
I'll give you some examples of what kind of companies we have invested in. So we have invested into companies such as oil services. So we made an investment into a company called National Petroleum Services. And why did we invest into NPS? Because we believe that oil services are fundamental to the oil-producing countries. And there is a need for an indigenous company. But we invested in NPS because there is a world-class management there. Well-trained professionals who run a clean, sustainable business in the oil services space. They are second to none. Before investing, of course, like any other firm, we do a massive amount of due diligence on the management, on the business design, on the business model, on the sustainability. And then, of course, there is an operating due diligence, there's a financial due diligence, which we do.
One thing that is missing in the due diligence that you're listening right now is on the market volatility. The oil and gas companies right now is undergoing a tough time. Shell is losing jobs, shedding over 10,000 jobs. Petronas as well. Many other oil companies are in trouble. Did you factor in these kind of risks in the oil and gas sector?
You know, we are not a typical private equity fund. We are an investment holding company, so our horizon is a little bit longer than most PE firm who would be operating in a 3 to 4 year horizon. When we invested, we did not call the oil price. It was a call on the quality of the management, that they had seen oil price volatility in the past and they had managed it. Since our investment 2.5 years ago, we have seen this management managing their expenses, managing themselves in a very volatile, competitive environment, and increasing the volume of business and increasing the EBITDA. And that happened because we have a world-class management in place. We would never invest into a company in the most fastest growing sector if it had a substandard or mediocre management.
How do you synchronize the fact that you're still a private held firm versus trying to achieve that great corporate governance that you speak of currently?
So the corporate governance started at Fajar Capital right from the inception. Majority of our board is independent directors. All our board committees are chaired by independent directors. So our investment committee, our audit and risk committee, our HR and remuneration committee is chaired by independent directors.
But the CFO of Khazanah is a board of Fajar Capital.
Indeed. Dato Izani Ghani is a member of the board. He's a member of the investment committee. He's a member of the audit and risk committee. So that's the first transparency governance that you want to bring in, best in class governance at the Fajar Capital level. We do the same thing at the portfolio company level, and I'll come back to you in a minute.
Okay.
Then we have got world-class auditors, like KPMG has been our auditor from day one. So they go through all our portfolio companies have similarly leading accounting firm as auditors. Now we are not required, we are a privately held company, to disclose in the public domain, but with time we will be disclosing more and more information.
What would be the asset under management for Fajar Capital?
So Fajar Capital has got a capital base of $712.5 million. Our assets are in excess of $1.4 billion. We have an infrastructure fund which we manage, which is a separate fund. Plus we have investments in 8 portfolio companies.
Right. According to the research by INSEF, right now Islamic Finance asset is worth about $2.1 trillion US, and this was in 2014. And with the asset under management that you speak of, about 1.3 billion US dollars, this is still a far cry from the total global Islamic finance asset. Is there a lot of room for Fajar Capital to grow to actually capture this Islamic finance asset?
Indeed. So when I say the core asset, which is the Fajar Capital asset, but we have got 8 portfolio companies. So, for example, Bank Islam Brunei Darus Salam, which has in excess of $8 billion in assets. We have got GEMS Education, which has got more than 7,500 teachers. We've got huge assets there. So the group as a whole has got much larger assets if you take the consolidated impact.
Let's juxtapose this with the current economic climate. Right now, sourcing for funds is problematic for the traditional, conventional asset management companies. Do you think Islamic finance asset management companies or private equity companies have a better stance or better position to actually get more funds to grow their business as compared to a conventional company?
So, Ibrahim, let me rephrase that question by saying that is there a bigger need in the Islamic finance industry to have more asset management firms doing private equity, producing alpha return, which is high returns, and beta returns, which is consistent returns? The answer is absolutely yes. The future of Islamic finance industry very much depends upon how we invest into asset management platform which can feed beta revenues and alpha revenues into zakat fund, pension funds, Hajj funds, Awqafs, ministries of religious affairs, the whole endowment space. This is so fundamental for the future of the Islamic finance industry, Takaful industries. The non-banking Islamic financial institutions is the biggest growth area, and today it is being limited because we do not have enough focused asset management platform which are doing asset management in their own rights as principals.
Why do you think this is the case, that we don't have enough focused institutions like this?
Because when we started the Islamic finance journey, there was a choice and there was a fork in the road. The founders had the opportunity to either create banks or create asset management firms as a business model. They, in their wisdom, chose to go for banks. As a result, they created what is called the Sharia-compliant Islamic financial services industry based on the banking model. However, to move to the Sharia-based impact investment model, we need to shift to asset management. So the initial focus was get the banking products right, give people current account, cards, home financing, letters of credit. Then they moved on to the capital markets like sukuks and other things. So I think this is the next frontier, and this will happen.
You spoke quite extensively, not just in this interview, but in other speaking platforms as well, on growing the Awqaf or Waqaf business. And Malaysia, for the longest of time, many institutions in this country is trying to grow that space as well. Why do you think that we're still in the nascent level of trying to grow the Waqaf business? What's lacking? Is it lack of regulation and legislation?
So the entire non-banking financial institution space, which includes Waqf funds, but also includes zakat, Hajj funds, and Takaful industry funds, has not grown because the asset allocation model did not have enough alpha revenues and beta revenues. Where were these funds putting their money into? basically either in bank current account or bank deposits with Islamic banks, of course, or they were putting money into properties. So they had some missing asset classes. And the equity allocation, which is the big growth provider in the long term, if you look across cycles and across decades, was missing in their asset allocation model. It was missing because there were not enough high-quality providers of alpha revenue asset management platform with proven track records.
Yeah, but there's also this risk that is associated with these kind of asset allocation. Can I make the argument that why some of these assets are placed in lower returns type of asset allocation is because of the lower risk that they carry, 3 to 4%? Because right now I'm pulling the Sovereign Wealth Institutional Investor Fund report that says you are chasing an alpha of about 20% of your targeted returns. Now, while this is still achievable, it also carries that kind of higher risk. Are Islamic financial institutions that is committed in asset management funds willing to take on these kind of higher risks?
So I think every portfolio has to have a diversification and immunization. And the diversification has to be across all asset classes. So there is a case for cash to be managed through bank placements and sukuks. There is a case for properties to be an asset class through direct ownership of properties or through real estate investment trusts. There is a case for stocks, and in stocks you look at high dividend, low beta stocks. And then you look at the other spectrum is high alpha private equity type of return. If you look globally at the endowment industry, pension fund industry, they have this allocation across the spectrum. So of course, the Awqaf funds, the Zakat funds, the Takaful premiums have been deprived of these kind of authentic Sharia compliant alpha revenues. And therefore their growth has been impacted. But as we start having more and more opportunities, you will see these institutions turning to the asset management platforms, which will be created, inshallah.
This morning, I'm speaking with the CEO of Fajar Capital, Iqbal Khan. Up next, we'll be talking about the key trends affecting the Islamic finance industry, particularly in the fintech sector. This is BFM 89.9. This morning, I'm with the CEO of Fajar Capital, Iqbal Khan. Iqbal, let's focus a little bit more on the outlook of Islamic finance. Fintech and all the other peer-to-peer platforms are sprouting. If I can say so myself, they're sprouting like mushrooms. And the Securities Commission of Malaysia has even apportioned or accredited 8 peer-to-peer companies. These are the kind of new things that is afflicting the finance sector. Is Islamic finance ready to embrace this kind of business? So to speak, is Islamic finance ready for the digital age?
Islamic finance is a new industry. As a new entrant, when they came into the banking sector, they had to make a business case for their relevance. So apart from the Sharia standard, they had to fight their turf on better service, and therefore they had to build brand new technology platform. If you are a large institution and if you are an old institution, you would have a technology platform which is dated, which is what we call legacy platform. So every time you want to launch a new product, you have to go through what is called system amendments. So the Islamic banks have been very lucky as a new generation of financial institutions that they have brand new systems platform, and therefore they're able to embrace technology much easier. The other thing is that this kind of digitalization is a great opportunity for all banks, including Islamic banks, to provide better service to customers. Case in point, single statement. If you are banking with a large bank, you will find it very difficult for them to pull together your credit cards, current account, debit card, and your mortgage and your pensions and your wealth management to one single statement, because the legacy systems do not talk to each other. Mm-hmm. Islamic banks are in that position where they are creating they are embracing technology, and therefore they are producing innovative products, and this will become their competitive edge for them.
Could digitalization therefore be the key innovative product for Islamic finance for the future then?
Absolutely. I think digitalization leading to democratization of wealth. the whole area of wealth management, where banks provide their customers the ability to save and invest. Banks come up with innovative products. So, for example, if you have a current account and you have a mortgage, you can have what is called Sharia-compliant offset mortgage, whereby your mortgage actually is funded by your current account balances if you have those balances. So I think these kind of products are gradually coming into the market, and the innovations in fintech also give Islamic banks and conventional banks huge power in analytics. Therefore, better decision making.
Based on my conversation and interviews with some of the key players here in Islamic finance, including Datuk Muzaffar Hisham, the Maybank CEO, Maybank Islamic CEO, Datuk Badli Shah, the Deputy CEO of Tabung Haji, as well as Rafi Hanif, the CEO of CMB Islamic, they say that they can't operate without proper laws. And that's the reason why, basically, they conclude that Islamic banking can grow or flourish properly. And that's why the Islamic finance asset, at least in Malaysia, is growing because of the proper laws that we have in this country. Do you think that the Middle East, at least, does not have that kind of crystal clear Islamic laws, Islamic finance laws? And is that a hindrance to growing the Islamic finance assets in that region?
It is no doubt true that Malaysia has the most progressive and most enabling regulations issued by Bank Negara in the last 2 decades and by Securities Commission, and that Malaysia has a number one position in that space. The Middle East has a different situation. They have got a huge consumer loyalty to Islamic finance. And the commitment and the drive for Islamic finance in the Middle East is driven by loyal retail customers. And these customers have come in large numbers, and they've had now an experience of the Islamic finance industry for 3 to 4 decades. These customers are going back to their corporate constituencies and telling them, I want my pension to be managed in a Sharia-compliant manner. I have my pension with the Saudi Aramco Pension Fund, or I have a pension with the Saudi Arabian Monetary Agency. They are going back to their corporate constituencies and telling them, we want our money to be managed in a Sharia-compliant manner. To get this trend, which can be understood in terms of a book by Malcolm Gladwell called Tipping Point, when a concept is embraced by a large number of people, and that's a very powerful factor that is also now driving the Middle Eastern regulatory bodies to create a level playing field for Islamic financial institutions.
In the Middle East, while the demand is there, it is run by a very interesting method. It's not run traditionally by institutions, financial institutions. It's mostly run by these investment houses, which is tied to the families. Bin Laden Group, as mentioned earlier, Kanu Group, many others, right? Is this the way forward for the Middle East, or do they have to rely on these large asset management companies, private equity companies, the way we see elsewhere around the world?
So, Ibrahim, the good news is that whether it is in the Middle East or anywhere else, Islamic finance did not appear by an edict of the government or a king or a president or a ruler. It has grown because of the demand of the retail investor. Mm-hmm. In that concept, as a business model, this is a C to B business. Consumers have gone and established a business. Now, most of the Islamic banks in the Middle East, in fact, without exception, are all regulated by central banks. And they are run and operated by professional management. And the central bank applies the same standards to them as they do to the conventional bank. So, in a way, the road is a little bit steep for them upwards. They have to do an upward climb because they have to all the time comply with the central banking laws, which in a specific case, risk weightage for a Sharia-compliant asset would be higher, both under IFRS and under risk weightage of Basel III. So therefore, they have to try harder. When you are disadvantaged, you work harder and you become much more resilient and stronger. Of course, as I said earlier, the Middle East is hugely blessed because they have this massive demand by loyal consumers who are coming in large numbers, and they have built this industry.
This morning, I am speaking with the CEO of Fajar Capital, Iqbal Khan. Iqbal, let's talk a little bit on the uniformity, or in this case, the disuniformity of Sharia pronouncements by various markets. I know you're smiling. Every single Islamic finance practitioner always faces this problem, both at the Sharia committee platform as well as the Sharia departments of where whichever institutions they work, and the market for that matter. Is this something that we should embrace in the world of Islamic finance, or we need to fix this? We need to have the same standardization that we see just now with the standards that you mentioned, including the Basel III, including the FIRS, including the IFSA that we have in Malaysia.
So, Ibrahim, let's give this whole issue of lack of Sharia conformity a context. Globally, on fiqh al-mamalat, on the jurisprudence of public dealings, there are more than 12,000 plus fatwas, which are religious edicts. The ones which apply to the Islamic finance industry, around 6,945 or so fatwas. There is a consensus amongst the scholars on 95% of them. So there is a lack of consensus on 5%. I believe in any body of law to have so much uniformity and to have a little bit of lack of consensus, 5%, is very important. It is important because it leaves the hope for innovation. It leaves the opportunity to deal with black swan events, things unpredictable. And I think it allows a creative tension to develop, which is good for the industry in my view. There's been a talk of Sharia arbitrage. Actually, cannot be a Sharia arbitrage thanks to organizations like IOFI, like IFSB, which was created by Her Excellency Tan Sri Zeti's leadership, like all the other regulations which have led to a harmonization of the Sharia standards, not only amongst themselves, but with the international accounting standards, with Basel III. And I believe those contributions have given the industry now a main body of law which is consistent and about which there is no dispute.
Going forward, there's a lot of similarities, or people like to draw the similarities between Islamic finance and the ESG criteria, or ESG funds, including the ESG being the environmental, social, and governance. Do you think there is a harmony between the two? And if so, do you think that there is a lot of opportunity to invest in ESG-oriented firms?
So there is obviously lots of commonality between the ESG framework and the Sharia-compliant framework. One area of difference is the use of interest, which is fundamental to the Sharia standards. But what we have in common finds us a universe of possibilities where we can collaborate and partner with the ESG framework to come up with a common proposition. And I believe that's kind of an alignment is good for the industry.
I've just spoken to Iqbal Khan on The Breakfast Grill. He was the recipient of the Royal Award for Islamic Finance in 2012, organised by Bank Negara Malaysia and the Securities Commission Malaysia. I am Ibrahim Sani for BFM 89.9, the business station.
Thank you for listening to this podcast. To find more great interviews, go to bfm.my or find us on iTunes. BFM 89.9, the business station.
This year, I will chew 117 number 2 pencils.
I will doodle 9 Staples notebooks to death.
When it comes to school supplies, it's guaranteed your kids will go through a lot.
I'll make a whole lot of paper airplanes.
I will lose my backpack.
That's why you get guaranteed savings for back to school at Staples.
I'll give away my last pen to Nathan in math class.
Get guaranteed savings at Staples, and right now, 1 subject notebooks for just a penny with a $5 purchase. Staples, that was easy. Valid on select SKUs while supplies last. Limit 6, ends 8/25/12.